What's up, man?
Hey, not much. Like getting ready for the cold season.
Yeah. Do you want to say it, or
That's
you
okay.
you, you want me to say it? Winter's coming
Winter's coming. Yeah, like I still haven't watched Game of Thrones, so
at all?
at all. I know.
Okay.
Shame, shame, shame.
Well, we won't get into that part on the podcast. Um, in fact, it's really cool that we get to connect. And I mean, I guess what the audience doesn't know is that we've known each other for quite a few years now. We've even had the pleasure of being roommates for a while.
Yeah,
But it's been a couple of years. You're in Montreal, and I'm in Ottawa/Gatineau. So we haven't had as many chats as we used to. And so this is one of the, this is a forum for us to kind of revisit some topics that we used to love to chat about, uh,
yeah.
including blockchain, including all cryptocurrency type stuff, which is
And meaning of
um,
life.
and the meaning of, and the meaning of life. So, like I said, we can just talk about whatever in there, but it'd be maybe cool to get like just a sense of who is Shayan Eskandari and where you come from.
Sure, I can talk for an hour with that question, but um, so I grew up in Iran. That's one thing. I moved to Canada in teenage years, going back and forth for a few years. And I guess we can get to the details of that. But right now, I'm doing my PhD at Concordia, and the thesis is mainly like new technology or old crimes. So crimes that are using blockchain or cryptocurrencies into evolving a new form. And in a parallel life, I'm doing smart contract auditing and code review, or like smart contract security and with Consensys diligence. So that's currently what's happening now. And there are some side projects too, which we can talk when needed.
Always have side projects going on.
Yeah.
That's a good start, and you mentioned quite a few things that we'll get into more detail on, but it'd be good to kind of attack them one by one and maybe get some definitions on the table. I think that's going to be important
Sure.
for those maybe who are listening who are a little bit less familiar with blockchain tech. You mentioned smart contracts. Um, you mentioned, well, Consensys, which is the company that you're working for. Um, even maybe before we go there, blockchain. Let's get to the
Yeah.
base, the very, very base. What is blockchain and what does it allow us to do?
Well, all right, let's start with a simple use case, which is like Bitcoin was it's still one of the simplest blockchains. And it's kind of like weird when you say simple because Bitcoin by itself has so many complexities in there. And mainly because the way we know how currency work and how money works, it's totally outside that realm. Although like if I ask you like how does like a Visa card works, like you don't know, you just know it taps and it works. Like you don't know what goes on behind it. And
Yeah, there's
similar
a
to
huge
that.
back end that we are not aware of. We just kind of take
Yeah.
for granted, right?
Yeah, but what we can do is to attack this from like digital currency methods. So since 80s, there were like a lot of attempts to have a digital currency that just works. And there were like many things like digicash, eCash, like a lot of other in 80s and 90s came in. And even like later on, like Liberty Reserve or some others. But at the end, it's just there was like a database of who has how much money, and that database was controlled by like a website or like a CEO. And all of them almost failed, mainly because of either the company was doing some like money laundering or unintentionally doing money laundering because they were not doing proper like KYC or know your customer um, diligence. But the other problem was like if you want to do an international one, like something that different companies would accept, why would I be okay if you run the database? How would I know if you're not changing your balance or like doing some shady things? So one of the ways to solve this was if we both like a double booking accounting, basically. Like if I have a triple booking, double booking, I guess double booking.
Multi-booking.
So it's like if I have a database and you have the same copy, so we know we're on the same like truth.
Right.
And what blockchain did, what Satoshi Nakamoto did in like Bitcoin was a way to use like torrent mechanism and some other cryptography mechanism. So we can have like a same database and we're sure that is the final copy, that we both have the same copy. So that was like a big thing that happened there. So, and it's basically, they say it's append only. That means like any new transaction would be appended to what we already have. So what we all have to do is verify the database we have and just like add things on top of it. And these things are blocks. This whole thing is a chain of blocks,
Chain of
which
blocks,
becomes
hence
like a blockchain. And this was a simple one. So like Bitcoin is just like a balance. Like it's kind of different in the money. You can see it as like change, like bills and change. So I give it to you, and it's recorded that you are the owner of this piece of coin,
Right.
which is called UTXO in Bitcoin. So it was a simple. It was just like transactional, like just money, like one coin here and there. And then in 2014, 15, there was this idea of like, why we can extend this functionality to some other things. So why not just like one coin from me to you? Like we can send the coins to this contract or to this address, and it does some logic. Like it's a gambling program that no one runs. And that's the idea of smart contracts. But the name smart contract is kind of tricky because it came from like a paper by Nick Szabo in 90s. That the smart sense is mainly like automated. You can see it as like a vending machine. Vending machine is a smart machine, right? Because like you
Exactly.
give it cash, it gives you things, but it's not smart.
Although we wouldn't call it smart, we just call it
Exactly.
a vending machine. I think that a lot of technologies pick up these monikers, these labels, in part to make them more popular or more easily distributed. But I want to pause there for a sec, because I think, well, first of all, you covered a lot in a short amount of time, and I think it's important that we dissect it just a little bit more.
Sure.
When you were explaining the simplest of blockchain applications, Bitcoin was your example. You said that it's like a double accounting, right? And I think that's a really important concept, because if we're transacting, you and I, we want to make sure that you and I both have the same record of what went down. Because if that wasn't the case, then I think you open it up to the potential for fraud, among other things. And so I think Bitcoin is really, it's a genius invention by Satoshi Nakamoto, who is maybe not a person, maybe an organization, we're not too sure, but he is the original inventor of Bitcoin, wrote the white paper, if I understand correctly. And the chain of blocks makes it so that at any given point, we have a deterministic way of representing who has how much money, right? And all the ways that the money changed hands to get to where we are now. Is that about accurate?
Yeah. Like you get the trace of like starting when the Bitcoin was mined, that specific one Bitcoin that you're talking about, till like the trace of like all the hands it changed and like everything that happened to it. Yeah.
And everyone has the same record. So I think that sums up Bitcoin. And then you got into smart contracts, which is like a more complicated version of this protocol, which tries to decentralize the truth of the state of transactions, maybe is a way to put it. A vending machine is an example of like a non-blockchain smart
device. Yeah.
Smart device. Yeah. What can we do differently with the blockchain? Like, can you give an example and a real application of a blockchain-based smart contract?
Yeah, like so just to connect these two together, even Bitcoin has some capabilities that you can do smart contract based, like multi-signature accounts, or similar to Ethereum or the smart contracts. And what that is, so when you go to a bank, you would start like a joint account, like which means like two people have access to this. You sign like who has the signature on the account. So you can implement this whole thing using a smart contract or multi-signature address, which is the same concept. And say, like, let's say out of us 5, 2 people need to sign to be able to spend from this address. So as long as 2 or 3 are, like, you can sum up these numbers up to 15 people with any combination, which adds like this fact that like no one's holding this money. The whole money is like on this cryptographic address, but me and you need to sign out of 5 people to be able to like, get the money out.
Right.
So this is useful, like let's say for a partnership in a company, or someone can give the third key to like a lawyer or someone like trusted, and like implement in a way that money would never be stolen. It's always sitting there, and it's always there. So as long as we get to a consensus that like, all right, let's spend some money from this like account, we can do that. And the difference is like with banks, like that bank can go insolvent, that bank can get robbed, or like the other person can take the money out without you knowing, or someone can be corrupted and like use the bank address to like get the money out. Like with smart contracts, it's the logic that is out there and no one can change it. Now with more complicated smart contracts, when there's like all these security issues that might come with the code, but the more simpler it is, like the multi-sig, it's pretty like concrete right now, then pretty secure.
Yeah, because in our current systems, legal, financial, and other, I mean, control over these systems is up to the whims of humans, of people, and people are corruptible, and people can conspire to find holes in the system, and they can and will take advantage of that. So this is a very interesting technology with a fascinating potential that may allow us to make things more transparent, right? If they're properly implemented.
Exactly,
I think for me, blockchain, that's what it represents for me. It's on the path towards decentralization. It is a viable tool to get us there. So I think it's an important technology. And I think the world, there was this boom in crypto asset prices in the last decade. We all saw the rise of Bitcoin and all these other cryptocurrencies. It probably came with a lot of hype. And what does that mean for you, who saw all of this? And we played in that for a little bit. We thought it was interesting, and millions of people played in it. But what's happening with cryptocurrencies before we get back into smart contracts and ICOs, right? And this phenomenon of ICOs. So
like the new one is DeFi, is like decentralized finance, which is like similar hype is happening. So like I'm trying to like figure out if there is a less philosophical way of getting into this, but we can also get there.
Just run with your thoughts.
Yeah, I'm just gonna say like the reason I got into Bitcoin early on, like in 2012, was so growing up in Iran, I was always a geek playing around with computers, and I remember I wanted to like set up some Linux machine on like a server, and I was not able to do that because the code that I was using was hosted on Google Codes and SourceForge, and these two sanctioned, like these two were American companies that had sanctioned Iran for financial transactions. But for some reason, they also sanctioned Iran's IP address, so you couldn't download this open source software from them. And it really bothered me back then. I was like, I don't have any bad intention. I'm just like running this, playing around with this server. Why I can't do this? And also in parallel, there was like so many online things I wanted to buy, or just access to PayPal to be able to like pay for like subscriptions or anything, and I couldn't because I was living in Iran. Mm-hmm. And coming up from security background, when I moved to Canada, I was working on Linux kernel security and so deep down. And I had this existential crisis that like, if I make a breakthrough here, nothing's going to change. No one's going to notice. And this Bitcoin came in my radar again. And I was like, this is too good to be true. It's not possible to do this. And I spent like 6 months to try to break it. And finally it broke me. So I switched my thesis. I like basically switched my life toward on this. And the beauty of that was, as a user, which is pseudo anonymous, it's not fully anonymous, you have like this address. Imagine a random email address, like looking at that. No one could like limit me from using it. No one was there to steal my money. No one, like, as long as I control, like, do proper OPSEC or have my security, like having a key secure, no one could just stop me from using it. And that was beautiful. I was like, no one can tell me, like, yeah, it's in my hand, it's mine. Because even let's say if you, like in Iran, if you have like $1 million under your pillow, you can't really do anything online with it. Like you have to go to black markets and like do some other random things.
You still have to convert it into some kind of digital form of
and which is limited. Like even if you log into your PayPal or your bank account from Iran, like your account gets suspended until you can justify why you're there and like other things. So this was the beauty of it. And now, like, going back to like a lot of financial crisis or financial fraud, one thing that we've seen, like you pointed this transparency of blockchains, which a lot of financial fraud happens a decade after someone leaks some information and we know that someone was stealing $1 billion in the last decade. And we've seen, like, even in I think it was in the US Treasury, that they announced $20 trillion have been missing in the last 10 years. And after going back and forth, they're like, yes, $20 trillion.
Trillion with a T.
Yes. And
Wow.
still no one knows what happened. They're like, yeah, we have to go back and see our books. They accepted that, yeah, it's lost. So those things wouldn't happen if there was like transparency, because like people are watching it. So with the whole, like a lot of blockchain or decentralized finance, we could say that all the mistakes that happen in finance are happening here too, but 1,000 times faster and transparent. So if any fraud is happening, people just see it right there, not a decade after.
Yeah.
So that's one of the big difference I see with this. And
which is huge. It's important to maybe underline that, because what are the implications of $20 trillion in value being wiped out that can't be accounted for? The implications are going to be felt on a societal level, an economic level, a political level, and perhaps some of the unrest and upheaval that's being experienced in the United States is in part due to that. Maybe money wasn't put in the right places. The investments weren't made in the right places.
Yeah, exactly.
So I fully agree with you. It's revolutionary, and I love how I like your anecdote from when you were younger in Iran. And I think what this all comes back to is agency. Perhaps it gives individuals more agency to control their economic freedom, more so than in the status quo and in previous, financial systems. And that also comes with a lot of implications. And I don't want to get too philosophical like you, because that could be a rabbit hole, but I mean, it makes me ask the question, what does that mean for the individual going into the future who has more and more control potentially over his or her money, and that's decoupled from the system? Because in the past, the financial system was very much coupled with the state, right? Fiat currency, let it be.
Yeah.
So I wonder what that's going to bring with it when individuals maybe have even more power over their financial well-being.
Yeah. So just to add something there, the other thing, like there's this saying that like if you can see it, you can feel it, like you can relate it to yourself. Like, so one thing is like maybe a lot of people would not understand what is it to live in a sanctioned country or like feel that way. But the other way of telling this story is, now for doing anything with money, anything with value, or you don't have any option, just one, which is banks, like, or use this money system that there is in the country that you live in. And what cryptocurrencies did was like offering an alternative, good or bad. Like there is an alternative that if you don't want to give in, like there is more freedom of having more options out there rather than only one option, which is using a Canadian dollar here. You still have the option of using euro or US dollar, but still that's almost the same system at the end.
Well, if you go to a corner store and you offer them euros, they're not going to accept it.
Yeah, and also gold, right?
which is crazy when you think of it. Gold has a value. It had definitely in the past, but it still has some intrinsic value. It's a physical resource. So
yeah, that's the thing. But with this, you have the option of doing more things, and it's a smarter money than the fiat currency. You can do a lot more with it. Some of them might not be reasonable to do, but some other are like you can, right?
Like smart contracts. You can embed them in smart contracts, and you can parameterize a transaction between two people. You and I, we make a bet. We make a bet that tomorrow it's going to be sunny. I say it's going to be sunny. You say it's going to rain. The winner of the bet gets $10 in cryptocurrency. And so we can encode that into a smart contract. And lo and behold, tomorrow it's raining. The money's automatically going to be transferred to you. Is that right?
This is almost right. So the problem here is like everything till the tomorrow date is fine. Who's telling the smart contract that it is raining or it is sunny? So that's the problem of Oracle problem. That meaning that the truth or the bridge between the blockchain and the real world still an open problem that who's incentivized to do this. So there are different approaches. Me and you can
vector of attack. It's
yeah,
a vector that you can use to manipulate the
but
contract.
also it's a core concept, right? Like you are bet on a core bet. So there are like methods of like trusting an entity, let's say, like the weather network has a smart contract, sends the news, and like we can see that. There's another one using the majority votes, let's say 100 people vote. The more there are different methods of doing this, but technically you're right, or in theory you're right. Technically there are like those issues, and that's one of the research I'm doing now about like oracles, which is like the source of truth.
Let's talk about oracles. This is fascinating. I was looking forward to chatting about this. It's a new concept for me.
Yeah.
The weather is a perfect example, I think. So we have this bet, but who decides if it actually is raining tomorrow? If it's a weather source that you pay, that you finance, and you say, hey buddies, tomorrow it's going to rain, right? Even though maybe tomorrow it's not going to rain, or it doesn't rain, then you win that contract and you get the money. So what's an oracle? How does an oracle let's get more into depth.
Okay, let me try to define.
Yeah, because so you were talking about votes and stuff. Like, I want to understand that.
So oracle, the definition would be a bridge between the real world data and a blockchain. So to explain it further, like blockchain, there are a lot of nodes mean the computers are running this copy of the blockchain. They're online, they're on internet, but they're a closed system. They don't have access to outside information. They're just like can verify everything in that blockchain, but they can't verify like anything outside, like the weather or anything else. So the problem here comes in that like you want to get some data from like real world data into the blockchain, and this link is still like open, like it's still like an open problem to like how to do this in a way that is like secure. And it becomes like Oracle problem. And if you go back to Matrix, the Oracle, so Oracle wouldn't tell you what the truth is. You have to ask a specific question to get the answer. Like Oracle wouldn't come to you and say like, this is the meaning of life.
That's literally how it plays out in the Matrix. You do have to ask the Oracle the right questions.
The right question. That is the key. Like you can't just ask a random question. The right question. So it becomes like here in a technical aspect that like in that smart contract, let's say on the weather, we can code this out like, all right, on this part, like in this the day after when the bet wants to settle, you have to ask this smart contract to ask weather network API for this specific value and check this. And then who runs this code is another aspect. Like you can make it as like a trusted server, or like me and you run a server, or the third person running a server, or you can ask it from 100 people saying like, go check this value, send it to me. You can add like incentive models on it. Like if they send $1 with this, then they get like $1.50 back if they're right. There are like so many incentive models of like how to do this.
Okay, pause just for a sec, because this is good. So you're talking about these different models that an oracle can check for truth. So one of them was the oracle pulls from multiple sources, and you're looking for some kind of consistency between all of them. Is that an option?
Or aggregate them in a way.
Takes an average or median or something like that. Okay. Incentives, that's really fascinating. So you have to, humans operate on incentives. Our actions are driven by incentives. Okay. That's the study of economics. So if I incentivize you to be as close to the truth as possible, you have every reason to give that truth, right? Feed the truth into the system. But it's interesting because where does the incentive come from? Maybe the smart contract, and I'm going to move away from the initial analogy of our bet to maybe the smart contract is, it's a business entity, okay, of some sort. And we're going to get into DAOs later, but it's some kind of business entity which is returning its earnings, right? Maybe some of those earnings go into getting the right data inputs, making sure that they're coming from good sources, but also that those sources are incentivized to provide the truth. Is that
Yeah.
is that something that we're going towards?
So making the smart contract complicated makes the whole problem much complicated to even describe. Like the weather one and the betting was simple enough to be able to like move around it. Like let's going back to this example, let's say the bet is on $100, and those like people, 100 people that are telling the truth, if they get like let's say the majority of people, the people like tell the majority truth. Okay, let's just get this again. So we have only one truth and million lies, right? Like truth is always the same value, but also it's like subjective or objective. I don't want to get there, but like let's say whether right now in this latitude and longitude. So if more than 50% of those people, 100 people tell one value, they win the game, right? They win the voting game, or the majority. So half of the pot is distributed between those people that told the truth. Or let's say 100 people are giving a number, each is paying $1 with their like as like stake, that like I'm telling the truth. Here's my $1 to say that I'm invested in this. So like whoever's told the majority would get like a chunk. Like that's the incentive design. That's a whole area. Like
if I draw a parallel with payment processors, the way they currently function, we all pay a transaction fee on transactions. Maybe not the end user, but let's say the business that's doing the transaction. And a part of that transaction fee goes to fight the inherent fraud that's going to happen on a daily, monthly, weekly basis. In this case, it's like you're reserving a transaction fee to ensure a high fidelity of sources of truth. And it's like we don't have to worry so much about fraud anymore, but it's more so truth that we have to worry about, which I guess they go hand in hand, because fraud involves some kind of like malicious intent. But so
yeah, kind of like
the transaction fees dedicated to that.
Yeah, like this is a whole idea of like a lot of people talk about like you can do a lot of legal contracts right now through smart contracts, and everyone's like, this is so complicated. But have you looked at a legal contract recently? Like it's so weird. You can't really understand what's there. Only a lawyer can. So the same thing applies here. Like you have to read the code so experts know this. But the difference is like the legal contract, you only know what's in there in a case of dispute or aftermath, like that. Like you go through this, like, did I sign this or not? But with smart contracts, the whole checks happen before you get engaged. So even here, before you put your bet on, you know how the system works. It's not like there's like a footnote somewhere that like, in the case of dispute,
another term in the contract.
Yeah, so that's the main difference, but also it's complicated in the sense of like legal contracts right now are complicated too. Like terms of services, like who reads them, right? So similar to this, but here you have more incentive to read, understand, and that's why there's a harder initial step to like get into that. Also considering like even acquiring some cryptocurrency to play with it is like another thing.
So what I'm getting from you consistently is that it's complicated. Like we theoretically have answers to some of these issues, but in practice, it's complicated to implement them with a high degree of accuracy, ensuring that like it's foolproof. Well, you would say something you always used to say is nothing's foolproof. Everything can be, right?
Yeah.
So
this is an open problem. That's why I'm doing the research on it, right? Like I'll tell you more about the Oracle problem later, like maybe in a month or so. But before that, we can just go back to the basics.
Yeah, we should probably not dwell on any one thing. I think it's interesting because every time we talk about a subject, it just brings up more questions. And then, well, I have a tendency to create links with the business world, which is where I'm currently active with startups. We're, working on building an incubator, building multiple startups in different industries. And I'm always, I guess, trying to find the practical implications of a technology and how they can be used to serve humanity in productive ways. So I'm sorry if I make it go in that direction, but you're right. We should go back to basics and kind of just, for the audience's sake, understand the technology.
Yeah.
Basically, where were we before that? We were like cryptocurrencies and the hype. I think we talked about that.
Yeah. So okay, let's talk about another use case for a smart contract that. So right now, if you run a gambling website, it's illegal in a lot of jurisdictions, but also most of the gambling websites, they do this exit scam that like when they have enough traction, enough money in there, they just shut down and no one knows because of the regulation. They hide their entities, like who's running it. And when they do exit scam, it's easier for them to just like go to a Caribbean island and just chill. But if this money is stored in a smart contract, this whole logic is a smart contract, no one's really responsible for that. No one's holding that money. So the whole money is that in there. So it adds a lot of like better regulation in that sense, or better security for the users. The main thing is like the difference would be how to use it, which they have to learn some of the key management, how to store their private keys, or like how to use cryptocurrency, which if you consider opening a bank account, user experience of opening a bank account with user experience of starting cryptocurrency is much easier because opening a bank account, you have to go with two different IDs in a bank and sign a bunch of things that no one really reads, but they should. It takes like up to 1 week to get their money, like get their card. So that's compared to buying cryptocurrency, figuring out how to do that, it's much easier. It depends on the, I guess, IQ level too, but hopefully it's getting easier. But the same, like the bank has like so many steps that you just accept that this is the way it is. But with everything else with crypto, because you have this sense of like someone else should take care of this for me, it always plays around. Like, and also there is this whole not irony, but like I don't know how to say that, but contradiction that like, let's say you invest $50,000 in something. Do you want to be responsible and keep the keys always like safe? Kind of like you want this assurance that someone else is taking care of this too. So it's, yeah, there's this trade-off that like you are responsible. You have to make sure you just don't leave your like private key on like a piece of paper on your desk.
Yeah, even banks have insurances. They literally have insurance for handling people's money. So they kind of pass the risk off to another entity that they're probably just paying premiums to.
Yeah, exactly. So
no one wants to handle the hot potato, but in a way, using smart contracts allows us to outsource it to an algorithm.
But still, you have that private key that proves your ownership, right? Like that comes back to this point that with cryptocurrency, there is more individualistic, that like I am me and I am in control of my wealth. So if I make a mistake, I might lose everything, right? At the same time, with the bank, like if the bank makes a mistake, you might lose everything. But at the same time, there's this assurance that like most of the times in places like Canada, not that much states anymore, but like you might not lose your the value of your dollar, right?
Yeah.
Like another difference was so I remember I got some mutual funds maybe 5-6 years ago, and every year like there was $200-$300 in interest going on. And when COVID happened, the money was like 10% less than initial investment. And I was like, why did I even like, if I had this money and just around would look better on the wall than like in a bank account, because it would actually have the same value.
Could you have invested it in cryptocurrencies instead?
That would have been a lot more money right now.
And not just anyone in particular, maybe just an index fund of sorts.
Yeah, like diversity still is a thing. Like diversify everything, and 20% of that investment would result in 80% of the return, right? The power ratio.
The power law, yeah. It's the same thing on the stock market. You've got 5 stocks that are essentially propping up the Fortune 500. The Fortune 500, the S&P 500.
Yeah.
Your Amazons, Facebooks, Netflix, they literally, I think, maintained more or less the value of the S&P 500, whereas most traditional non-technically focused businesses took a dive during this last financial crisis.
Yeah. So with that, we can link to like some of the new smart contract use cases, which is like something called DeFi, or decentralized finance, which one of the really interesting one that especially if people are familiar like banking or like hedge funds. So like, let me give this like background. So like with hedge funds or fund managers, what do? They get your money. They're like, okay, I'm going to invest 20% in Apple, 10% in Amazon, and some other things, and I'll manage this percentage. Like if one goes up, the other one's down. I'll sell some of this, buy some of that. So you're always exposed to 20% Apple, 10% Amazon, and other. And they get some fees. So they get some money from you because they're doing this. There's this whole idea of automated market makers or portfolio managers on DeFi, which is fascinating. So what you can do is you put, let's say you want to put 50% on, I'll still use the stock market, like Apple, 50% on Amazon. You put this money, this ratio there. So 50% of your portfolio doesn't mean the same dollar value. Like it could be $1,000, Amazon, $500.
Okay, so
it's like
based on the stock, the number of stocks owned. It's not based on the value of the stock.
So you can define it either way. It can be like, I want to have like, this is $2,000. I want to put 50% on like Apple, 50% on that. So it's like $1,000, or the other way around. But then you put this in there, and like, let's say in a smart contract, and let's say someone else wants to buy, like the prices change and someone wants to buy Amazon stocks and sell Apple. So what they do is like, there's this portfolio right here. They can trade. They basically trade from your portfolio. They balance your portfolio, but they do their trade. So they also give you fees for offering liquidity to the market.
Okay.
So this is one of the use cases that you remove that fund manager and you directly connect the trader to the liquidity that is just sitting there. So it gets complicated if I want to explain more, but like, it's fascinating to like what a fund manager is doing, just like trading, right? So why not a trader does this directly and pays the fee? It pays less fee overall, but pays the fee to the person that is put the money and liquidity right there.
Because at the end of the day, all the transacting parties want is liquidity, whether you're a buyer or a seller. And what you're saying is essentially automated market making allows for well, the removal of the human component, right? The stockbroker, which I think
exactly.
I don't even know if stockbrokers are. I don't. Is that even a career anymore? Like, do they?
Yeah, it's huge actually.
Is it? Yeah. Okay. Because I thought it was like going heavily towards automation, but in this case, it's automated, but it's also decentralized. If we're still on the block.
Yeah, usually like the final decision makers on like what to do, and like the person that is getting your money to invest is a person, right? So it's not a smart contract in that sense, and that person gets a lot of fees or bonuses that money could be going back to like actual people that are giving their money to like invest, right? Like just imagine how much like the fund managers, they get a lot of bonuses, good for them, but that money could go back to the investors that are.
I'm gonna take a moment to actually tell a story, a business story that I learned recently. You're talking about like active funds, right? Where you have a manager that's doing all the, that's doing the transacting, they're taking. There was, have you heard of Vanguard index funds?
I think so. Go ahead.
Well, they became prominent in, I think as early as the 70s, 80s, 90s, because they came up with an approach that was totally different from what everyone else was doing. They went away from the actively managed funds and they went towards passive index fund investing. So the investor hands over a chunk of money, they put it in and wait. And what that does is, on average, the returns are maybe slightly less, but because you're not taking out the fees, because you're not making human error, and the stock market tends to go, in an upward direction over time and by a lot, as you know, with compounding, it ended up being like far more performing than actively traded funds. So, just taking the human component out, lowering the cost structure of having to pay those fees, and maybe letting automated market makers, facilitate the transactions. It could make a huge difference in the realm of investing.
Yeah, like exactly to that point, that automation, like, or high frequency trading, one of the early ideas was, other than making money, was to make more markets more efficient. But it's interesting that they did make the efficient for like that transaction more efficient, but overall it added so many layers and so many leaks of like fees going out that I don't think the whole market is efficient right now. Like maybe like it could just remove some chunks, but that means a lot of people go out of like work, right? So
That's
yeah, it needs kind of reform. Yeah.
I think people, work. I mean, that's not the point of this podcast. So I don't even want to go there. Maybe we'll save that for another conversation. But so that's fascinating. I read up a little bit on automated market making, and there's an element that you didn't mention yet, unless I missed it. But in trying to maintain the market's liquidity, it automatically adjusts the price and the supply simultaneously of whatever's being transacted. So the example that I had is if you're putting more and more of, let's say you're trading Ethereum for Bitcoin. That's like that's a transaction you're trying to do fundamentally, and you're putting more Bitcoin in to get Ethereum. Well, it's automatically going to raise the price of Bitcoin so that you can't buy as much Ethereum or something like that.
Yeah. So I'm trying to like remember the formula. Was it like, I think it's X plus Y equals K, or X times Y equals K, I think.
Equation.
So the whole idea is like, let's say in this example, let's say Ethereum is $100, Bitcoin is $200. So if you put 1 ETH and half a Bitcoin in a market, that is the price that you're setting, right? So you're saying $100 of this, $100 of that. And if you come by and want to buy like 1 Ether, you can pay. So it's basically the basic version of like supply and demand. There's like, if you can buy this goes up because that K should be like static, like it should not change.
Right.
So that's how it fixes the balance. So the more you want to buy, you can never buy all the Bitcoin in that market, because like if the Ether price gets so high that you
make it economically disadvantageous to continue buying in that. Okay, so K is just a constant.
Yeah, it's a constant.
It is a constant ratio between two currencies.
Exactly.
Okay.
So that's why this always works, and especially it works when there is a huge liquidity there. So you cannot change like in this example, you can just change the whole market price by like $100. So it becomes like more efficient when there's like millions of dollars in this market. So you can't just move the price that much. But it makes sense because it just uses supply and demand as the fundamental there. And so before, a lot of trading with like order books, that means like there was a market maker and taker that I would come say like, I want to sell 1 Bitcoin for 2 ETH to Ethereum, or like 1 Bitcoin for $1,000. And you would come say like, all right, here's $1,000, give me the Bitcoin. And now with this method, it's just, there's no market maker. I won't come, like I come there and say like, here's the trade. I wouldn't just put it there for someone else to come take it. And that's why it's automated market making.
Mm-hmm.
And that with that K, there's a lot of like economy behind it. Like now with another project, this project is called Uniswap, the one that you're talking about, which basically this uni-side, like two-sided market. There's another project called Balancer, which extended this to up to 7, so you can have portfolios and like exchange between different values and different like pairs. But yeah, exactly. The concept is so simple that apparently they talked about this. Uniswap has an interesting story that they talked about this like in forums and here and there. And a guy, Hayden, he was mechanical engineer, and he came to like start reading about blockchain. I was like, oh, that's fascinating. And he started coding this formula as like he read somewhere, and I was like, oh, let's see if it works. And then it became like, right now it does more volume than Coinbase some days. And it's totally like on the blockchain, no fees somewhere, and like trustless. And there were a lot of projects in the ICO time that did raise millions of dollars to make a decentralized exchange or something like this.
Mm-hmm.
And now they're using Uniswap as their backend, a lot of them.
Okay.
So it's interesting that a project that didn't raise any money by a mechanical engineer was like, let me try to see if it works, and it worked.
Sometimes the best projects are bottom up and not top down. You know what I mean by that?
Yeah, exactly. And especially with like DeFi and like this smart contract world, the good thing is like, so before, if you wanted, or even now, if you want to do any financial instruments, any new markets, you need to get a lot of licenses. You need to have a lot of capital. You need to have links with like the right people to get the site signature. So you wouldn't end up with from SEC going to jail.
Yeah.
With DeFi and all, you can just do it over a weekend hackathon and like just have a whole market out there and people start using it. That's one of the open market and open finance.
What's the incentive of doing it other than, yes, you're changing the world and you're literally changing finance, but what's the incentive for doing it as an entrepreneur? Is there a way to monetize this? Is it a viable?
A lot of them you can get fees on top of every transaction. But the fact is, like, if you're open source, so someone can just like fork it and like start that without any fees.
Without any fees.
But then it becomes like, how you model that. Now, one thing is like you can have tokens in the system that like if you're holding that token, your fees, you wouldn't pay fees, let's say. So that brings some demand for that token, which you as the entrepreneur is like a majority holder of that token. So your money, if there are more users, premium users that have this token, you have more money. Like tokenization is like the main concept there. You can do a lot there, just figuring out how to make money.
That is a subject that I do want to get to, but first, maybe just to change the dynamic a little bit, I wanted to learn a little bit more about Consensys, because I have to admit, I don't know much about the company that you work for. What are they into? And what's the kind of vision for that company?
Let me email PR first. But like, so Consensys is the biggest blockchain company, and they started 2014 or 15. Joe Lubin, which is the CEO of Consensys, was co-founder of Ethereum too, and he's been around like in a lot of like different businesses. But so Consensys is focused on Ethereum mainly right now, mainly because first of all, a lot of people here are coming from Ethereum Foundation, Ethereum board. The other is like Ethereum is one of the most mature smart contract platforms right there. There are like other ones, Tron, Next, or some other that they basically follow Ethereum in this sense. And so they have like infrastructure, everything like MetaMask, which is a wallet for Ethereum, is a product of Consensys. Like all related to Ethereum development is done by Consensys. And I work with Consensys Diligence, which is the security group for code reviewing and smart contract auditing and analyzing attacks, hacks, and these kind of things.
Wow. Yeah. Kind of a big job. And there's a lot of heat on a lot of these organizations. I mean, I saw this a few years ago when we were still roommates. There was a huge hack. I think it was on DAO, and it was over $100 billion. And so like, there's a lot of heat on this, on this domain, on this industry. So you're basically working to make it more secure for everybody, finding solutions that will make them more practical for consumer-based applications and business applications.
Yeah, so like the way the work is, like, as I said, like anyone can start making a new market, a new financial instrument right now. And a lot of them it's called like DeFi Legos, that like you start this financial instrument that you want your liquidity or users' money to be stored in this other protocol, get the fees and do something else. And users can vote on like what to invest on and all other things. So a lot of assumptions that developers have, like they might not be true in the reality, or like it could be attack vectors here and there. So what we do is like basically when you finish with your code, you give it to us. 2 weeks to a month, we just go through everything, and we talk like usually like daily or like once a week or so, and we just like figure out if the code does what you want it to do, and if it is actually good idea to do it this way rather than the other way. And there's no like perfect science. Like every code we get is a new thing, and we have to like figure out. And now with the economical attacks, like we don't have like, I had to learn a lot more about finance and all like basic economy to be able to like read these codes, because like, and still like it's a big fact now that systems are getting so complicated that there are companies starting to do agent-based simulation of like simulating a whole user base of like using the system to be able to see what could go wrong. It's still like really early on, I would say, but it is hard. It's not simple.
No kidding. Well, And you're up against some of the most intelligent and ambitious people who happen to have bad intention.
Yeah, and also hacks become like all in $1 million, so they are more incentivized to find something than us to fix it.
Yeah, if they win, they get hundreds of millions of dollars, billions of dollars, maybe.
Yeah.
Where are the startup opportunities in blockchain these days? What are the trends pointing towards? And I asked this question for our audience because I think there's going to be a lot of young entrepreneurs who are always looking for that next idea. And I think this whole space is interesting. But if they're like me, I get lost in all the possibilities. And you and I, we went after a couple of projects, and it's like you can go in so many different directions. But what is turning out to be like a good opportunity, and where do you think more investment should go into?
So it really depends. As you said, it's like it's a whole. If it's similar to say like what can you do in finance, because like it's huge. And like one thing is it depends how much risk you want to put, how much like innovative you want to be, or you just want to like find a way for users to connect to technology. Like one example was
maybe the parameter is this. How do we, how can entrepreneurs make something useful in this space? Like where would you point them? Make something useful
so one way is like to understand what this technology can do, and then take one step back and say, like, if you want to use this in the back end of my application. So users would not exactly like directly should know anything about crypto, but the application is using cryptocurrency in the back end to like transfer value, transfer tokens, authentication. All these things can happen using the same technology, but not necessarily users are aware of like what is happening there. If they want to like experiment, I would say like if they have any ideas in finance that is there but not in crypto, just like try to implement it and see what happens. There's like so many projects that just started as like a overnight testing and experimenting, and became like $1 million projects right now. Even the whole idea of balancer, which was the portfolio manager at first, I think the founder was coming from mathematical side, and he had this formula in theory, and he was like, it's working. And everyone like basically said, no, it's not going to work ever. And when Uniswap came in, which was like just two variables, and it worked, got to like multi-million-dollar smart contract. And they were like, okay, so this idea could work too. That's the thing. It's crazy in the way like some applications get so much traction that it takes me a while to figure out what the use case even is. And a lot has to do with speculation too. Like that's another thing.
Huge factor. Yeah.
But it opens up a lot of things you can do that, like if you want to like tokenize a company, if you want to like, I don't know, like so many things. Like by tokenizing, I mean, like one project that is trying to do this in India, I think, is buying a house, tokenize that house to like 100 tokens, and 100 people can own the house and get their rent revenue.
Yes.
Like regulation and legal wise, that's more complicated than the blockchain technology right now. Because
you tried to do
that. Do that.
There's huge amount of regulations preventing you from doing something like that.
Yeah.
But that's what technology, cutting edge technology kind of does. It blurs the line between, well, it allows you to do this thing. It's not recognized. There are no laws that parameterize necessarily if you can even do that, because it's so far out. The laws don't even interpret that action yet. And so like Uber kind of drove themselves into cities, gained market share, and then fought to become legal. Yeah. Maybe blockchain is destined to follow the same path, more or less, just by being pioneers, right, in many different areas.
Yeah, exactly. I think it's happening because all the governments are talking about like digital currency now, CDCS, that to have their own digital currency, like the Canadian dollar on blockchain. Like right now they're talking, the main difference is like the same thing is happening, but like the main thing was like Uber was more incentivized to like push and do marketing campaigns and get it out there, and then talk about the legal side. With cryptocurrency, there is no this one entity to like promote and market and like push, right? And there are so many like maybe a bit like sketchy blockchain projects that do that, but a lot of them They are just copies of these open source ones, because like that's the whole point of like this decentralization, that there is no central entity profiting from this whole thing, right? But it is happening. The same thing is just slower than Uber.
Philosophical question for you. Don't have to go too far down the rabbit hole, but is a blockchain powered world less capitalistic?
I mean, it can replace capital, but then it can just change also incentives. Like, so like both socialism and capitalistic world, the core function, like the core of the society is still capital, who has how much resources. Capitalism is like pushes more for more value in capital and removes the human factor in there, that like it might not be ethical for people to do this, but it adds more profit, right? You would go with that. Socialism is like consider other things, but I don't think we have a theory that works right now.
It's confusing. Yeah, I heard I in the book Sapiens, I found his definition of capitalism and socialism very fascinating. Capitalism is decentralizing decision making in the economy. Private ownership, individuals can decide where to put their money, and people can produce and people can buy, and there's this really complex interaction between the agents. And socialism, but in particular communism, is centralized decision making, where like one entity runs the economic decisions for an entire country. One of the things that he said that blew my mind is that the reason capitalism won over communism again and again and again is because decentralized decision making is more efficient than centralized decision making in absence of high technology. And he says with the addition of high tech like artificial intelligence, machine learning, centralized decision making may get ahead of decentralized, because decentralized is disorganized as well.
Yeah.
So you don't really know where you're drifting to. You're optimizing for certain things like, you know, product quality and stuff like that. But it's an economy that's also going to create something as random as Play-Doh, which, you know, you can ask the question, like, is Play-Doh, you know, Play-Doh, like that,
Yeah.
the stuff that kids play with, like, is it useful? Is it like, does it occupy some kind of function? That's not important in capitalism. If someone has a need for it, they'll pay for it.
Yeah, but one thing that blockchain does, because of the transparency, it gets tricky. It depends like how actually you implement that. Like in China now, they actually have a blockchain-based digital currency going on, but the problem is like that added more surveillance power to the government and to the bank to see where exactly the money is moving and how it's changing hands. So that would say like it's a dystopian way of seeing like implementation of like blockchain. But the other side is like removing all the borders and making the globalization of a value, like a currency, is another thing that it doesn't affect. No politician can change any monetary factor. There was this book I was reading, which had this interesting sentence from the chair of the U.S. Treasury after 2008, when they were like printing money. He said that US dollar is our currency, our money, but your problem to like the world. That like, so even now we're seeing like, one thing I was reading also was like in 2020, so 22% of all the US dollars in circulation was printed in 2020.
Wow.
22%.
22%?
22% of the US dollar in circulation was printed in 2020.
In particular, to fight the current, you know, the pandemic and, you know, the economic downturn that would ensue. So they were just printing to.
That's one of the big things, and so that scares me. That's because the
It's
U.S.
terrible.
like it helps the U.S. economy to continue, but U.S. dollar is a reserve of like a lot of other nations. It's the way like value is being preserved. So it's crazy to see that. But with to get back to where we were, with this transparency, with this cryptocurrency, like let's say Bitcoin, the first day they said, like in the protocol, it says that there's going to be 21 million Bitcoin and no more. And this is the chart that like every 4 years there's going to be this much being printed. Like we know what to expect from that money. We know if you hold some money, how much like purchase power would it have? Like it wouldn't go down necessarily. It's a deflationary money rather than if there are more money printed. Yeah, there are more money printed, then this dollar that I'm holding doesn't worth anything anymore.
Yeah.
Actually, to that talk, like I've been obsessed with this in the past few days. So
Karl
this
Marx.
is a euro bill.
Okay.
Like yeah.
Yeah.
What's the value?
$0?
€0.
Zero euro. Yeah. And where'd you get that? Is it a real one?
It's a real, like it has like a hologram and everything. It's a real money.
What's its use? What do you use it for?
Exactly. Like that's fascinating. So I didn't know about this. Euro has this, they have like some touristic places, some other places, they have like this zero, like actual money paper, but €0. And they have like different things. So this one was made in 2018 for like the Mark's birthday, like 200 years of birthday.
Yeah.
But my question is like, is this money?
Don't forget, money is just the representation of value in our minds. Money is an intersubjective belief that humans have. And as long as a significant portion of the population believes it has value, it has value.
Yeah. So is this money?
So, well, not at zero, it's not. I mean, it's the indication is that it's not,
but
not worth anything.
Is this money?
What are we looking at?
Like this is Russian bill from like 1800s.
Wow.
1910.
Is that legitimate?
Yeah.
That's amazing.
So is this money? This was.
I mean, yes, it was. At one point, it was worth something to someone. Yeah.
But that's the question. Like if money, so money depends on like it's subjective now. Like it doesn't.
It always was. It always was subjective, and it's and I use the word intersubjective because again, that's another word that I lifted from Sapiens. It requires a belief in more than one party.
Yeah.
Because if I have something and you have something, let's say we're trading shells for twigs, and you have to believe that my twigs are worth more than your shells, and we can trade, 2 for 1 or 3 for 2 or whatever it is we decide. And so it is intersubjective. But if I'm alone, there's no trading happening. You need at least 2 parties, I think.
Yeah. So that's the thing. By the way, I bought this for $12. So if you want to know.
worst trade in history. Doesn't that make it like if you 12 like 0 divided by 12 is like infinity, so like you paid infinitely too much for it, sort of thing.
Yeah. That's why like I keep on my desk and every day I'm like just think about like what is this bill, what is this thing that runs the world right now, and the fact that like there's Marx's face on it, Karl Marx on it, is like
This brings us, I think this is a perfect segue into another topic that we mentioned, tokens, and specifically non-fungible tokens. Because what I think that that bill represents is a non-fungible token in the sense that you bought it for $12, even though it's indicated as being 0, but it's so ridiculous. It has its intrinsic novelty. Like you could probably sell it in a few years for $36, and you triple your investment, right?
Yeah.
So what are non-fungible tokens? This is crazy.
Yeah. So just to be clear, I'm not selling that anytime. It's like best thing money can buy is $0, is your euro bill. But $40, yeah, so
$48, going once, going twice.
So okay, like fungibility is an aspect of money that like $1 should not be different than another dollar. So that's like the basic of this. And there's like a lot of talks. It's like if Bitcoin, there's a trace of it, is it fungible or not? What if it's dirty Bitcoin? Or like we have the same for cash too. That gets some kind of in a gray area that if you know a cash, $1 is like dirty money. Is it like still the same as like the other one? But anyways, that's the fungibility of the money. And like with tokens and cryptocurrencies, there's like every 1 Ether should be the same as like another 1 Ether, Ethereum, 1 Ethereum, like every other should be fungible. there's this whole other standard called non-fungible tokens, or NFTs. That's the thing that we're talking about. And so it's basically like, you can see it as anything with serial number can have its token. That like as you said, like this has a serial number in here, and I can just have a token for this that is like the ownership of this. Or you can see that it has like diamond or art piece that have certificates, that ownership certificates. Those certificates are representing to that item, so it's non-fungible. Like that certificate is different than another one. The other thing that is more familiar is like the, what was it called? The magic cards, the playing cards that has like limited numbers. They're like baseball ones.
Limited edition.
Yeah, limited edition. So those cards are non-fungible tokens that which can be represented by a token that represents this item. So there is a whole concept like CryptoKitties, and 4 years ago, that was one of the use cases of non-fungible tokens, which was you could buy a cat or CryptoKitty, and this CryptoKitty had a like secret DNA. So the first generation was like much more expensive, and then you could breed these cats together with running the function breed and calling them mom and dad, and you would get a new kitten that was like the second generation, and this could go on forever. And each CryptoKitty had like a different token for itself. Like you could just send the CryptoKitty to each other. So that's overall the description of this. Just want to say one of the use cases for such a token would be supply chain, or something that like you want to link a product and see who had this product and with
who its position in time and space, and who it traded hands with.
Yeah. Basically. So that's one of the use cases, but I mean, my mind always works that like I find the attack vectors. So here with that, like let's say if you want to have this phone, you can have like RFID tag on it, and that tag can have a token which you can see the trace of where it goes. But then this becomes something called a stapling problem, that I can just take this RFID out of this device, put it on something else. You're still tracking on that RFID tag, but not this device.
You're right, and what it makes me think is like what you'd almost have to do in a perfect world is then you would have to run another parallel double checking function that looks for, well, was it removed from the phone? And like then you have a GPS tracker in the RFID tag.
Anyways, like let's not get there, but like the supply chain itself, like one thing that blockchain can help there is mainly that right now they're still working paper because they don't trust each other on running that database. Like who runs the database in a global market, right? Like this, is it China? Is it the stop sign like Madagascar, or is it like states important, like important states? Like who is running this database that tells, if it's digital, that tells this was the path? With blockchain, or as I said, right now there are papers because that's the thing they trust. Like they have a stamp, they give to each other, and usually every item, every container that comes, there's like a huge folder with it, the actual like the trace and like where it went. Right now, if they want to make it digital, the problem is who has the God access to the data, to this database, right? So with blockchain or similar, like I'm not saying the public blockchain like Bitcoin or Ethereum, could be just a technology implemented by the like I don't know if there's a foundation or like some organization that is like overseeing like all this, the supply chain in the global aspect. So yeah, that can help with like the transparency in there, that people can see where those items are coming. Yeah.
Is it fair to say that in order for blockchain applications to be truly effective, everything has to be running on some kind of decentralized architecture? Because it seems like the problem right now is that there's a plurality, there's a majority of systems that are centralized and controlled by an entity or another. And we have like a very small minority of applications, and important ones especially, that are running on decentralized blockchains. But the day that's no longer true, and you have a majority of like blockchain applications kind of checking and double checking every single system, then it becomes valuable. But until then, you're kind of in the uncanny valley, where it's like a gimmick. It's nice to have, but then your sources of truth, like we were talking about earlier, are all centralized. So, but do you see that, like, and I know there's a lot of questions layered on in one, it's like an onion here, but is that where the world's heading? The slow decentralization of these different layers of the super system that is the world economy, and maybe entrepreneurs' roles in this transition is to find those holes and fill them, one hole at a time.
I think that analogy works better for self-driving cars, that if you have all self-driving cars, our cars being self-driving, and then it works better. In this sense, like I've been joking about this for a while, and then I'm not sure if it's a joke anymore, but I was saying like cryptocurrencies, that one of the main ways that cryptocurrencies can take over is a doomsday. And with this whole COVID and the economy that's happening, I'm like, maybe I was like too right for this.
Yeah.
So that's the thing, because like the problem is the control and like the inertia that all these institutes have, like to change or like to fix things. Like one example is like the banking system. If you have seen, like a lot of them still using a DOS or like a really old interface because that system worked, and they just kept it patching it. They didn't want to change it because the cost of training people, the changing infrastructure, all those. But one example is a project called Jasper, which Canada did. It's pretty interesting. They tried to do this project as using blockchain for interbank transfers.
I heard of this. Yeah.
And it's interesting that within the 2-3 years, like they published everything. So it's interesting to look at. So it worked. At the end, it worked to be able to like, so if let's say if I'm TD or RBC, I send you e-transfer, they all do this on both sides, and then at the end of the night they go to this clearinghouse, and then that's called triple entering booking, like accounting, that the bank has one, you have one, there's this third entity that has one, so they come together, they check if everything's like
gotcha
the same. But they spend a lot of time, first of all, on this process every day, and a lot of money on just figuring out, because there is a lot of discrepancies here, like trying to figure out what happened there. So this Jasper was basically replacing this entity with a blockchain, which means that they don't have to like settle on this. They can just move the money like on this clearinghouse that is a blockchain. It worked, but the problem was that kind of like a privacy, in the sense that like it was too transparent for the banks. That's like, let's say RBC didn't want National Bank to know how much they transferred with TD. And that was the problem, that it didn't actually get implemented. So although like you would say transparency would be really good to have here, but at the same time it goes back to like the traditional word of like secrecy, and this is my information, I don't want anyone to know.
Working in silos.
And I think the good thing that is happening, this technology is still pretty young, and still like people are learning how to do things, but it's getting to a place that if anything, like any bank or any financial instruments like fails, we can't just stop patching that and use this technology to replace whatever there was. That is one of the things I'm seeing. And as I said, like I was joking about the Doomsday, but now I'm like, maybe we're getting there. But yeah, I would say like the alternative is the key.
Well, what the big problem I see is, and I guess the traditional banking system goes the same way, but in a doomsday scenario, who's to say we're even going to have internet? And if we don't have internet,
it depends, how much of a doomsday you're talking about. But like, because we can go back to like electricity too. Like infrastructure is a big thing. We assume that we can do that. I remember a while ago in last November, I think, I had another existential crisis with the jobs, because like one of the things I've been working and got drawn me into this protocol was like the censorship resistance. Like that is trustless, the censorship resistance. People can just are you there? Oh yeah, you were in the movie.
I'm very much into what you're saying.
Yeah. So yeah, it was like all this blockchain, we're trying to be censorship resistant, so governments can control this and that. And in Iran, they basically shut down internet. Like they unplugged the internet.
They unplugged
like the inside the country were connected, but unplugged the internet.
Yeah.
And I was just like so angry at myself and all these people in this committee that were like, you're talking about censorship resistant technology, and now we failed miserably. Like there's nothing. So I added this thing called Iran test that like if we're working on any censorship resistant technology, can you pass Iran test? And I remember I like started working on these like hardwares that are like basically a mesh network. Like if you have this, it makes a Wi-Fi, you connect to this, and up to 5 kilometers around, it can communicate with the same device. But I kind of played around with it. Like no one was around me in 5 kilometers around me to like talk to.
You don't have a critical mass yet, but
so there are a lot of technologies like this.
Sorry, this is a Wi-Fi antenna?
Yeah, it's a low bandwidth, like kind of radio antenna, but it has like a Wi-Fi here and connects that to there. But there are so many. There's another project called Antenna, I guess, or something like that, that trying to do these mesh networks. But that's the thing. It's easy to get to be the tinfoil paranoid person in this world of like connectivity, that everything's connected, right? But
I don't think so at all. I think,
yeah, well, it's hard to get there. It's really hard to incentivize. Like, first of all, these are like, who funds this project? Like no one really is funding this kind of project. There are a few companies like Bridgify that has an app that works with Bluetooth and like worked in like Hong Kong and some other places, but it's just an app, right?
Maybe, I in recent years, and even after we became friends, I came to learn the importance of foundations and nonprofit organizations and their role in society. And, they're not profit driven. So they don't have these traditional business models where they have to like sell and, make profit at all costs, but they're rather mission driven. And maybe it's going to be an organization like that. That has
how can they be sustainable? That's the question, because they have expenses, they have like things, right?
It's the question to ask. And with us, with our incubator accelerator, we are focused every single day on solving that problem. It like our mission, we know what our mission is. It's to build startups. It's to build hundreds of startups, if not thousands eventually. But we need to do it in a sustainable, like in an economically sustainable way. And so we're getting close to that point where we can be self-sustained on the value we bring to our members, which is a huge, to me, it's like a big deal. It's a big step. And if we can show other organizations, nonprofit organizations, how to do that as well, I think it's going to be huge for this movement. And it's organizations like those that could fund projects like these. And in fact, that's something, actually, I'm going to say this live right now, but that is something that I would seriously look into supporting, and we may be able to do something with it.
Yeah, I can link them with you if you want to get in touch with them.
Please do. I love it. Love it.
Yeah, so the infrastructure, another thing like Doomsday I'm talking about is like the failure of the institutions that we rely on in daily life. So yeah, also we might not be far from that. We'll see.
Who knows where the world's going? November 3rd is in 2 days. Is going to be it's going to be a defining moment in history, to say the least. We'll see how that.
Maybe a week after, you still don't know. So.
Well, I think that's good, man. Because truth be told, we covered a lot. We went into some subjects and not others, but we can do more of these in different different episodes. So I think it's okay to stop there for today. And
yeah, for sure.
And like I said, we'll have the chance to cover more topics, and maybe you'll be interviewing me next time. Who knows?
Yeah, we can define like better scope for the talks and like go on that, right? Or like even have invited speakers.
Yeah, I'm
so far we are the invited speakers, but
this is all experimental. So we'll take the best from it, and we'll leave the worst, and we'll see where that brings us. But thanks again for taking the time, dude.